A record in the art world. Got a portrait selling. I'm not even going to mention his name because I don't know how to pronounce it perfectly. Klimt. Selling
5 letters.
$236 million at Sotheby's. It makes the painting the most expensive modern work of art ever sold at auction. And who knows more about this than anybody else? Robert Frank. So it's now time for our Inside Wealth Report. The bankers to Warren Buffett and some of the nation's richest families speaking to our own Robert Frank in an exclusive interview. What's going on, Robert?
Andrew, good to see you. Well, they advised Sherry Redstone on the $8 billion merger of Paramount and Skydance. They advised the Grosbeck family on the $6 billion record sale of the Boston Celtics. The Waltons, Pritzkers, Kochs, Wrigleys, many of America's wealthiest families turned to them for advice on everything from selling assets to raising their kids. BDT MSD is the silent partner to the quiet wealthy, as I described them. I spoke to the co-CEOs, Byron Trott and Greg Lemkow, about the explosion in family wealth and family offices and how the wealthy see the economy and the stock market right now.
The one common theme with all of them, and this goes back 40 years, so from Black Monday in 1987 to 1999 technology bubble burst, to 2001, to 2008 and 9 great financial crisis, to COVID. All of those were short, reasonably short, V-shaped recoveries, declines and recoveries. Every single time, closely held company owners and their family offices leaned in. They leaned in, they invested more, they made acquisitions, they every single time.
It doesn't necessarily impact their investing. And again, these families are investing for decades, and whether that's in their business or outside of their business. So they're less focused on exactly what's going on in the market right now and try to deploy capital to diversify their wealth and create economic opportunity over a longer period of time. So there's anxiety generally, but much less so than public market investors.
As we mentioned, Byron Trott has been Warren Buffett's favorite banker, one of his favorites for decades, calling Trott, quote, the rare investment banker who puts himself in his client's shoes. Here's what Byron said that he's learned from Warren Buffett.
Warren is in a league of his own. He's encyclopedic about business and metrics and knowledge and how to identify durable cash flows, durable companies. He has discipline like no other. You know, he says, use the philosophy of Ted Williams as a batter. Wait for your pitch. He had great batting average because he only swung at those pitches he knew he could hit. And Warren, I've learned this just a massive amount over the years. He's a great teacher. There will be no one like him ever to replace him.
For the full interview with Byron Trott and Greg Lemkow and the secrets to success for today's largest family-led companies, you can sign up for the Inside Wealth newsletter out tomorrow morning with that interview. CNBC.com/InsideWealth. That's CNBC.com/InsideWealth.
Do you have a Klimt you like more?
Well, you're talking about the Klimt that just sold the Sotheby's. So I was in Vienna. I was in Vienna this summer at the Belvedere and some of the other Leopold, some of the other museums in Vienna. There are the Kiss is a famous piece of Klimt's that is unbelievable. But this portrait was great. I mean, it's one of the best pieces I've seen at auction ever come up. $236 million.
I mean, you would walk into a room if someone owned that, and you'd just go over to it and couldn't take your eyes off.
That is the ultimate wall power right there.
Wall power, not willpower. Now, why do you think? And you're saying you're a little bit surprised it went for so much. You think
the estimate was
who owns
the estimate was over 150. So this was well over.
And they wanted
estimate.
To make a splash because
there were 6 bidders bidding for 20 minutes. My guess is it really came down to 2 very wealthy people or countries that wanted this.
A country.
One guess is that Abu Dhabi, which is now a big investor in Sotheby's, just has 2 museums, the Guggenheim and Louvre in Abu Dhabi, that have opened up. They would love this to have as an attraction. So they are I have no idea who bought it, but one guess would be that they were among the bidders.
Well, that sounds like vendor financing almost. So they
oh.
Well, no, if they're a big investor in Sotheby's and then they did up the price to $230.
Well, it's the sovereign wealth fund versus another piece, so it's not the same entity.
I want to go back to one thing that Byron Trott said that I was fascinated by about Warren Buffett.
Yes.
The idea that he only wanted to swing at pitches that he thought he could hit. I thought that was meaning. I think there's a lot of investors who don't approach it that way. Now, as a result, you don't. That means you're not taking.
That's why it was so late on Apple.
No, and that's why it's not taking as much risk. But it's just conceptually an interesting concept to think about.
It's a really important point because it's one reason that Byron has become so trusted by the wealthiest families, because they come to him with deals all the time. And more than half the time, Byron says, don't do this deal.
Right.
As you know, covering M&A, there are not a lot of bankers that will tell you, don't do this deal.
Right.
And Byron has advised families for decades. And when it comes to a deal that finally makes sense for them, he'll say, you should do this one.
Right.
And that's why he's gathered probably the most valuable network of wealthy, private-led companies and families that trust him.
Right.
Because he's going to say, this isn't your pitch. Don't swing at this. So I think he's applied that lesson really well to build this company and this network.
A great lesson, though.
Yeah, if you watch baseball, you don't know, guys swing at things in the dirt. You don't know they're in the dirt till they're in the dirt, right?
Be fast.
Yeah, you gotta be.
You got to move fast. I mean,
you don't know it's coming straight down the pipe, and a lot of times.
But sometimes you do, and I think this is what Warren's been able to do, which is on the one time he sees that fat pitch.
Yeah.
He can move so quickly to actually hit the ball. Whereas, by the way, I think a lot of times actually people miss the ball because they actually can't move fast
Remember
enough.
the financial crisis? Those were big fat pitches.
They were.
12% from
Great example.
Goldman Sachs in a convertible.
Great example.